Hello and welcome to this week's Questioning the Manager. Today we have David Smith, Fund Manager of Henderson High Income Trust, an equity and bond portfolio that aims at paying investors a decent level of income. David, welcome to Questioning the Manager. David, we have to start with Mr. Trump's surprise election victory. There's a lot of talk now of increased fiscal spending, particularly in areas of defence and infrastructure. So what has this meant for the portfolio, and is this causing you to change your approach?
I think there has been quite a strong sector rotation. So mining, bank sector have performed well, whereas perceived bond proxies or defensive sectors such as tobacco, utilities, etc. have underperformed that scenario. And that's because I think people see inflation as good for global GDP, good for commodity prices, good for mining, and also inflation is bad for bonds. So hence banks are doing well because a rising bond yield environment is good for banks' margin, but clearly that's poor for deemed bond proxies in the market. So in that scenario, actually, given our more focus on defensive names with good dividend sustainability, given that positioning, it has been a bit of a drag on performance for the trust.
Is lower sterling actually benefiting UK corporates?
I think it is in terms of a translationary impact. So, 2/3 of the UK market derives its revenues from overseas. So clearly, a weakening sterling is good in terms of those revenues. I think for UK manufacturing, that's only a small part of the economy now, the UK economy. So clearly, although the companies become more competitive overseas, a lot of those UK manufacturers that are left generally have diversified their manufacturing base where they have facilities overseas. So it remains to be seen how much benefit they will have from that. And then you've got to look at some of the UK domestic names, such as retailers, where they obviously import some of their or a lot of their product, a lot of their materials, which are obviously priced in US dollars typically. So clearly, the weak sterling has a cost implication, which means margins are becoming more under pressure.
If I'm looking to invest right now, why would you say the UK, and specifically, why would you say Henderson High Income Trust?
Well, the UK post-Brexit has become clearly a more uncertain world. What I would say, though, is, as we've just talked about, the UK is a very global market, so you do get exposure to overseas earners. It's also got a very good corporate governance policy there, so that kind of adds a certain protection to investors, and it's got a very strong dividend culture, and I think that's kind of the link into why Henderson High Income, in an environment where we've got low interest rates, low bond yields, Henderson High Income is very attractive on an income point of view. A dividend yield of over 5%. We have grown that. The board increased the fourth interim dividend this year, so the full year dividend of 9.15p. That's 3% growth in last year, so it's yield and often new growth as well. And when I look across the portfolio, it's a well-diversified portfolio, and I'm very confident in terms of the dividends of the underlying holdings. Plus, we've got revenue reserves to protect us in case the outlook becomes more challenging from here.
Finally, David, we're at the end of a very interesting year in 2016, and we're looking forward now to 2017. So what would be your outlook for UK equity markets?
I think when you look at global GDP over the last few years, it's one could describe it as modest. And I think that kind of continues going forward. Yes, governments are adding more fiscal stimulus, which may increase global GDP growth, economic growth. But there's also risk around that. You've got European elections next year. You've also remains to be seen what Mr. Trump does in the White House there, and whether he becomes protectionist of the US, and how does that play out in terms of global GDP growth. So certainly there's risk around growth. When you look at valuations, valuations are above the long-term average. Now that's justified if you do get earnings growth come through, but I kind of feel we're still in this sort of low growth, low inflation environment. And I think it's important in that scenario to maintain a well-diversified portfolio, which I think Henderson High Income is. So I still think we're well positioned for the longer term.
David Smith, thank you.
Thank you.